Good morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Sorry for the delay. The internet went down here exactly when I was supposed to start, and that always makes it interesting here, streaming from Costa Rica. So you guys know, I am streaming with a unstable infrastructure. I'll do my best to stay with you. If I drop out, I will be back typically within 4 to 5 minutes. So if you're in YouTube, I ask your indulgence. The stream will come back, hopefully. Welcome to the Traders Lab. I'm your host, Tom B. This stream is about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. It is about structured trades that are based on the 60 PDFs that are available to all of you in the Bookmap Discord Trader Lab community, as well as the community of like-minded traders who've come together to leverage their collective experience. In addition, there's a library of webinars that you can all have access to, and there is no cost for this. There's a link in the bottom of YouTube if you're inclined, and feel free to visit the Trader Lab. This is about the business of trading. Trading is not a video game. It is very much a strategic endeavor. It operates very much like gaming in the sense of that we are in a random environment, that it's 100% random at all times, not predictable. So it is really more about statistical edge versus predicting what's going to happen. Most retail traders come into this business with a toolbox of indicators and think somehow it's the right mix of time frames and indicators, and then there's an ATM in the basement. Now I'm going to suggest, as politely as I can, at best, that is naive. I've been trading 45 years, both professionally and otherwise, and all I can tell you about it, if you've thought about it, I've probably done it. And I started in technical analysis when it was in its infancy. It was looked down upon as voodoo. Now, of course, it's in the mainstream. Yet, how do you take these tools and how do you integrate them into actually market behavior? This is the purpose of Trader Lab. The purpose of Trader Lab is to help you understand how the market works, why it does what it does, how at times you might get in alignment, and only interact with the other participants when you have a statistical edge that favors you, just like casinos do. That's the business. You may choose to see it as something different, but I will assure you, at least, and it's just a personal opinion and based on some experience, that that's the business. So if you're trying to design for certainty, to develop your, quote, confidence, it doesn't exist in this business, regretfully. Don't we all wish? Why do we wish it was that way? Because that fits our psychology of risk aversion. But the casinos cannot avoid risk, so they only interact with the gamblers when they have a statistical edge. Does that make sense? Wouldn't you, if you're in a random environment like the casinos are, only play games or structured trades that have a statistical edge and accept that over time the gamblers do get paid, overhead and cost of production, but over time, if you're only playing games in the casinos that have an edge, you will over time extract the dollars from the gamblers. Might that approach of a proven business model apply here? By the way, this is what the 60 PDFs of structured trades look like. I'm not a vendor. There's no specific course. The Trader Lab is a community of traders that have come together to leverage their experience using these prototype trades that I put together many years ago just to share with traders who are asking what I do. And again, this is not a trade calling room. This is for serious traders who are interested in developing the business of trading. And of course, past performance is never indicative of future results. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure. Trading futures, equities, and digital currencies involves substantial risk of loss, and it's not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room, and these streams are available exclusively to Bookmap Discord Trader Lab participants to review, screenshot, reverse engineer, and build out your trade plan. And I hope you find this stream useful. Also, if you're in YouTube and you're visiting, welcome to the Trader Lab, and please give a like and a thumb up. Now, let's get started. Now, there are statistics that support what I'm going to be discussing today. I don't have time with the limited time I have, but in the Trader Lab, I am narrating and interacting with traders regularly This is what's going on in the Trader Lab. And you can come to this community. There's no cost. You will find that it is unique. It is traders helping traders, sharing ideas, sometimes having debates on is the market going up or down. And by the way, we had an interesting debate this morning. It's not really a debate, it's more a Joe wrote this. Tom is right. Our context is dependent on our fractal and trade plan. So is the trend up or down today? Well, some traders were getting long for counter rotations. Other traders were waiting for the shorts. What's the right answer? You can find that in the Trader Lab. And the answer, by the way, is what's right for you, not what's right for somebody else. But if some traders are getting long and they have a structured or vetted edge, that means statistically, like the casinos, they're playing a game that has an edge. Might some other traders say, you know what? I see the long, but I'm only going to take the shorts for continuation trades. Think about it. Are you thinking that way? Well, if you're not, you might want to visit the Trader Lab because this is how traders think. Now, the question becomes, which trader are you? Now, let me show you a higher time frame. This is an intermediate time frame chart. This is called auction market theory. How does the market work? Why does it do what it does? And how might you get in alignment? And of course, isn't that a great question? Well, you can develop a trade plan that fits with you psychologically. Some traders are going to go for 10, 15, 20 point rotations. Other traders are going to really shrink it down to tighter rotations. Now, for me, I kind of prefer more meat on the bone, but that fits my psychology. That means I trade less and I go for larger ranges. Other traders are more frequent traders. One of the things I've found, and this always has to be your truth, not mine, is that the risk is pretty consistent. In other words, based on structured trades we use in Trader Lab and others you'll develop on your own as you become more proficient. So if the risk stays pretty constant, then what about that thing risk reward? Is it possible that if we go for larger ranges, it makes up for the stops? If you risk 3 points, I'm just giving you a hypothetical, and you make 3 points, is that really what you want to do? Or if you risk 3 points, and I'm just pulling a number out, and you make 18 points, does that pay for your stops and still give you net profit? It's a question because most retail traders think this is a video game with an ATM in the basement. I'm going to suggest again, maybe not. Now, this is Wednesday now, and this is the RTH only, and these are RTH candles. This is called a micro composite. It is auction market theory. Don't worry about it if you don't know what it is. Most don't, because they're all hung up on indicators and curve fitting. I get it. Been there, done it. Don't worry about it. But if you keep waking up in the same place with random winnings, which everybody gets, and you're still not overall profitable, there's a very good reason for it. And you might want to come to Trader Lab and learn about it. I did a special webinar on it called Trader Groundhog Day. That's when you work hard, persist, you think it's just persistent, tuning, tweaking, and you do have winning trades, but you lose overall. Why is it? If you want to find out the answer, use the link in the bottom of YouTube if you're visiting. Now, these are levels that are created by the auction process. And again, I cannot take the time here to quote, teach you how the market works. You can learn that in Trader Lab. You have an open invitation. By the way, if you come to Trader Lab, introduce yourself, say hi, I'd like to meet you. 1517.75 was the low from Wednesday. Isn't it interesting to you that this level was from this day? It was the highest volume. And let's think of trading like shopping. What's too high? What's too low? What's retail? Notice this level here. This was our target for this day on the shorts. Notice this day level here. It was our target from Wednesday on the shorts. Do you see something interesting? Of course. I think you might. Are you curious? By the way, I don't use indicators. What do I use? And I'm not saying this is the only way to do this. I can't wait for an indicator, and I cannot deal with conflict. I'm already in a random environment. Should I throw more in the hopper in the desire to create certainty when I'm actually creating conflict and ambiguity? Do your indicators solve the issue? or are they actually part of the problem? I'm just going to pose the question to you. They were part of the problem for me. And I'm not saying you can't use them. I don't use any indicators, but that doesn't mean you can't. But if you don't understand how the market works, then what are you going to do with your indicators? Is that Google Translate? Not against them, but most traders think this is a business of time frame and indicators. So this was the target. Now, 1517.75. Let's remember that. Now I'm going to show you today, and then I'm going to take you into Bookmap and how this developed in real time. And if you have questions, please post them in YouTube down in the chat. Say hi, hit a like. And I hope I am connected here. Hold on, I got to reset YouTube. I'm not seeing the chat. Let's see if this thing works. Where is it? Okay, good. All right, hello, null zero. Okay, and let me get back here in Discord, having a little thing. By the way, if I drop out, remember, I'm streaming from Costa Rica, and at times things get funky. It's the monkey swinging on the chandeliers or more. So let's watch. If this is our retail price, our target that came from here, so our shorts on Wednesday were covered here. Now, you're either short on Wednesday, finito, go to the Barca Lounger, sip your mint julep, or you take longs from here for the squeeze and the short covering ahead of Thursday's market close. Is that logical? Now, I'm going to move it one day forward. I want you to see structure, and now we're going to go to Bookmap and show you the specific trades. Remember, this was the target coming down, 1775. If we open and come up and test it, and remember, there's no precision. This is what we call horseshoes and hand grenades. Is that a short? And if it is a short, where is our next target? It's here, back here again, to take the stops out under here, and then potentially somewhere down the food chain. Is everybody tracking? Give me a thumb up in YouTube, and if you have a question, post them. How we doing in Discord, in the Bookmap Discord Trader Lab community? Okay, guys, let's keep going. Hope you're getting something out of this, guys. I appreciate you visiting the Trader Lab. Remember, if I drop out, I am at the beach in Costa Rica, which is a nice place to be, except for the infrastructure, where if the wind blows or just because it feels like it, the power goes out, the internet goes out, and it's like, hey, cut it out. So I'm going to take you back to the RTH Open. Now, just before the RTH Open, in Trader Lab, let me try to get this working here. We were narrating shorts, mean reversion trades in the ETH, and we had some very nice shorts. I'm going to skip all of those. All that's available if you're in the Bookmap Discord Trader Lab community. There's a lot going on in there. I narrate consistently. I don't call trades. I provoke thought and education. You don't need a trade calling room. You might as well just write a check out to somebody and let them trade it. It does you no good. What might do you good is to learn to understand market mechanics. How does it work? Why does it do what it does? Now, statistically, now remember the 17, I just showed it to you. That's this level. It was yesterday's or Wednesday's low. I just went over this. And if you missed all this, you can review this if you're in the Bookmap Discord Trader Lab community. And it's exclusive for that community. There is no cost to it. And I figure, what the heck? You got to invest in yourself. You have to invest in education. And if you have, challenges, don't just be passive. Be aggressive about your own development. Take control. And if it doesn't work, try to learn why. I know for me, I kept thinking it was persistence. I really mean that. And for me, it was years, not months, years of persistence, trying to figure it out. Why? Let me tune, let me tweak, let me add, let me remove. That's my story. And that's at 45 years of trading. But when I started, that's all I knew. Indicators and technical analysis was a new concept. Previous to that, it was classical bar charting and fundamentals. Fundamental analysis. Oh, the report's this, the money supply was that. Holy mackerel. And that's how the market worked. Well, turns out there's more to it. In fact, fundamentals are really not that material anymore. It's a perception, and that's what the auction is about. And fundamentals can change the auction because an input needs to be processed. Does it change fundamental valuation, or does it just create a whipsaw and a convulsion in the market, and then the market stabilizes? We don't know what will happen. We know what might happen. Now let's go. RTH open. We're under the overnight mid, and we have yesterday's low, and we have this level. We also have, by the way, you might hear noise. There's all kinds of stuff happening here in Costa Rica. They use loudspeakers. If there's a rodeo, they'll let you know about it. If the coconuts are on sale, somebody's going to announce that too. This is the opening trade, RTH open, 8:30 Central Time. Let's watch. Now, this is a specific structured trade in the Trader Lab. Now, there's a couple considerations. First of all, we're opening at the edge of the universe. The ETH low is below us, and we had a reasonably negative reaction to the unemployment report. And we also have, at this point, 9 a.m. Central Time, Michigan pre, which is it's a very important report, and the market wants to see what what this says. Okay, so subject to your personal trade plan, you would be trading, the current structure. You also have to have a specific element in your trade plan for reports. Do you flatten out ahead of reports? If you have a scale, in other words, your risk is managed and you have enough range, do you basically trade through a report? And that's basically buying a lottery ticket. Fine. That's part of your trade plan. Some traders just get flat and they say, you know what? There's always other buses coming by. I'll wait for the next bus. What is this thing about a bus? It's called structured trades, trade plan. We're not making it up. The market's random. Do the casinos make it up? Well, we just paid the gamblers on the last hand in blackjack. Let's make it 10 cards instead of 7. Do you do that? Casinos don't do it. How come they're taking dollars from the gamblers and building huge, larger casinos, give you the cocktails and the ticket to the buffet? Is it because they're making it up? No. They're following anchored inputs. I did a primary webinar. It's only about an hour long. It's got over 30,000 views, and it's available to you guys in the Bookmap Discord Trader Lab community. Have you watched that? If you haven't, I'm going to make a strong recommendation that you come over to the Trader Lab. There's no cost for that. The link is in the bottom of YouTube. And maybe you find out what other traders are finding out. What is it about this business that most retail traders don't understand? And why? How about that? This is called VPOC migration. This is a structured trading process that you can learn, but you must vet it. Now I'm going to take you down into the micro structure. This is where Bookmap comes in. This is where order flow comes in. What we're doing here is taking elements and combining them. Bookmap is where as I like to think, the financial rubber meets the road. This is where we see inside participant behavior. So what do we have here? This is called the heat map, and you guys can go to bookmap.com. There's a bazillion educational videos there on what all these specific elements are and how to interpret them. So I'm going to really give you a high-level speed reading approach. Now, I don't use indicators, so what am I doing? Well, language. This is the language of the market. So instead of letting a Google Translate indicator, which is lagging and maybe conflicting and with multiple time frames, I'm interested in what happens here. So if I can understand resting liquidity, the limit order book, and I can understand that the market is potentially going to go south of the border, if I understand yesterday's low is right here, and I understand this was the low target from Wednesday. Let's remember all these pieces. Then if I open here and I see my seller, now where's my seller? Well, right here, I get my buyers. There's buy stops. This is the stop and iceberg detector. Selling icebergs. Let's watch closely. Let me open this up. This is how granular Bookmap can be. It's an amazing tool. I could never read the dome. I really tried, couldn't do it. Why couldn't I do it? Because I was trading with my brain and my eye can only be in a couple places at once. It can't be looking at the limit order book and looking at structure. So I got Bookmap to solve that for myself because I needed to improve my edge and I couldn't do it by willpower and multitasking. You only have, there's a certain limit. Limit order book. That's the heat map. I don't have to look to the right. It's right there. Selling iceberg, stop an iceberg detector, buy stops. Okay, now what? Passive sellers are here. Aggressive buyers are here. And buyers. Watch. Now, what I don't know, of course, is what's going to happen. You're going to go, oh, really? Yeah, Tom doesn't know anything. I like to say I'm clueless. Now, that doesn't always, I have to say it doesn't mean ignorant. The thing about trading is not predicting, not confirming. This is our human nature. We want that because we're risk adverse. We can talk about that for a month. Come to Trader Lab, I do talk about it all the time, our psychology. And we're battling and pushing back against our psychology, which forces us to seek confirmation and certainty in an environment where it doesn't exist. That's why Trader Groundhog Day exists. And that webinar will open your eyes to the problem. And it also suggests some solutions. This is the retail price. So I have buyers here. Who are these buyers? Buy stops. Aren't they market orders? Aren't they aggressors? My buyers are here. My buyers are there. My passive sellers are here. And I have no idea. Do I know they're there? No, I have no clue. But what do I know right here? You see this yellow line? It's called developing volume point of control. Terminology from market profilage. Let me explain what it is. Shopping. You want to know how to trade? Become a shopper for S&Ps. Do you ever go to the store if the price is too high? Have you ever walked out of the store or a car dealership because the price is too high? These shoppers are leaving this price. I'm not paying that, and they go here. What happens to these buyers? Were they initiators? Maybe. But what else are there? Buy stops. What's a buy stop? A market order. Delta is not a buy signal. It is an aggressor. Aggressors are made up of buy stops, market orders, and initiators. Of course, we don't know what. So here is my retail price. I call it a variable high volume node. I started doing this a long time ago, and I was actually criticized early on by the purists, market profile crew, because they said, no, that's not, everybody gets dogmatic. And for me, you start out learning something, and of course, that's where you start. Rules, black and white. We need structure. But if you are someone who's tenacious and you research and you think about what you observe, you start seeing things that maybe other traders don't see. And maybe there's something to it. And maybe if you spend the time, and I mean substantial time, investigating, researching, suffering through dead ends, great ideas that fall apart, and creating metrics, just like the casinos, you might be able to find something that has an edge. If it has an edge, then maybe over time, like the casinos, you can extract the dollars from the other participants. That is the business we're in. This price is too high. I'm not paying that. We leave the store. Now we come back. Is this price still too high? Let me show you something. Now, I always like to start this way. I'm in micro structure. If you have questions, post them if they're specific to what's happening here. Otherwise, come to Trader Lab. We go from there. What is this? Let's just look at what this is. This is a consolidation. What are consolidations? They're auctions. I'm not paying that. Yeah, but it's on sale. And then you break away from it. What does that tell you? Let's speak the language of the market. This is too high. This is resistance. I broke away. Now, what else? Let's look at the structure right there. Too high. I'm not paying that. Too low. Oh, yeah, it's a deal. Retail. See it? You guys see it? Now what? I'm not paying that. You get in your car. But you do like to shop at that store. It's your favorite store. And we come back and check the bottom. And we check this. So resistance, 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 VWAP, mid, and the trend you might say is maybe down. Short. First short in the Trader Lab. Watch. There's more. Variable high volume node, sweep. Now I'm adding other elements that are available to you in Bookmap. If I see a stop sweep, I now have the following. Too high, too high. I see the sweep. I come to mid, suggest potential counter rotation. Stop still has to be here. Watch. Too high, sweep, rotate, pull back, another short in the Trader Lab. Just stay with it. These are all shorts. These are structured trades. Now, if you weren't taking these trades, that's perfectly fine. My question to you is, would you even know there are trades here? That's what's in those 60 PDFs in the webinars. What's this? Break low. This is called VPOC migration. I made that up. I did a webinar on it. It's called VPOC migration. Very popular. Now, the thing about this trade, these are the opening trades. These are advanced. And the reason they're advanced, and you can always learn these things, is speed. So what I always suggest in Trader Lab is that you don't trade these, you learn to read it. Have you ever, any of you guys ever tried speed reading? So we're looking at a foreign language, and it is foreign, and speed. When you combine a foreign language, and until you're proficient, and look where we came back to the sweep, that's a short, that's a short, that's a short. All these are Trader Lab shorts. Now let me get some other elements in here for you. This is the overnight volume point of control. Remember what this is. Volume point of control developing. VPOC migration. What's this? This was the retail price from the ETH. There's over an 80% probability, past performance not indicative of future results. We're going to tag that. If you took a short here, might you be looking for this? That's the question for this astute community. Trader Lab, is that a yes? How we doing in YouTube? This is Trader Lab. You guys can learn this. I'm not saying you'll be successful as a trader, but you can learn this. And you can build a business if you choose to do the work. What's that about 25? Why am I showing 59.25, Sam? Sam, that is, where's 59.25? I'm not sure where, but if you're referring to this, this is the ETH midpoint. So maybe that's what you're asking me about. I'm not sure. Is that what you're asking me about? So let's keep rolling. So the next target with over an 80% probability, and you have to vet all this for yourself, is this. So if you took any of these shorts in here, or even this is where you're trying to go. First trade in the RTH, not including what we had in ETH. This is a sweep, and this sets up the anticipation of a counter rotation. Let's see what it does. This is Trader Lab, and this is Bookmap. See the behavior? If you're in the Trader Lab, you would already know when you see these sweeps starting here and then another one. And I posted in Trader Lab, be alert for a counter rotation. All this is in the Trader Lab chat. By the way, how we're in 1 minute. That's why I say don't trade the open. Learn to read the open. So now VPOC migration. So now let's watch. Whoop, hold on a second. I gotta just get something off here. And by the way, our target potentially is 58.30, not a recommendation. Never has to get there. That's not our job. So let me just see. Okay. I got to get some of these little green lines off here. There you go. Variable high volume node. I'm going to mark it. These, I look at these like support and resistance. Nothing is a wall. It is auction-based behavior. So that's kind of what I use them for. But the market can do anything. So remember, we're not in the prediction business. We're in the business of maybe. If I come across here, then I have this and the possibility to come out here or to come back here. Let's see what it does. So subject to your plan, you could be out of this trade because you may have a trade management process. This is the thing, and I posted this. Be conscious of this. This is a higher time frame level target also. So I got that and I got this. Let's see what it does. My resistance is, I have this as a possible rotation trade here to there. And then if it continues squeezing, we can come outside somewhere. Nobody knows where. Let's see. So there was two locations. VWAP to VPOC is a structured trade. VHVN, this area to here, is a structured trade, and down to here. I want you to know these are trades. They're not necessarily, they don't all work. Nothing works. The next location is up here. Let's see it. Why? Yesterday's low, Wednesday's low, naked volume point of control. Where'd this come from? You're asking me. I'm asking myself. Let's see if I can pull this chart back up. It was back here. So I'm coming back for a test. That's all that's going on here. Is yesterday's low still too high? Great question. Who knows? So I come back, watch, and I'm coming up into my levels. RTH open is here, and I'm squeezing out. I come to yesterday's low, and I come to this level. That's why it's on my chart. Now I'm going to show you a trigger. Now, if these are not your trades, there's nothing for you to do. You're just going to go, what's going on? If you have a structured trade plan, the thing about a structured trade plan, and we all take stops, so we have to get over that overhead and cost of production. There isn't a business that doesn't pay bills. If you take a trade and it's vetted and you take a stop, that's just a random distribution of outcomes. Same as the casinos. They play blackjack, they pay gamblers. They pay the gamblers, right? I come to my next level. Now, what is my let's look at my structure. Now, what's important about all this is location. It's like real estate. That's why in the Trader Lab, you're not making this up. This is not a video game. It is going to be random. We don't know where it's going. But if it starts coming back to a level and you understand what this business is, which is trying to figure out what something is worth, and it's a shopping experience, what's too high, what's too low, and it's doing it in all fractals or time frames. And you guys think time frames. Well, why is it rotating? And why does it find a place where it's too high? Where might that happen? There's the big question. How about here? Is that logical to you? Come back to yesterday's low. Come back to the price that was too low on Wednesday. Is it now too high? Well, if it was support on Wednesday and we come below it and we come back, you've heard the concept. Support, resistance. You break support, it can become resistance. No difference in the auction. So when I come up here, as far as let's look at the microstructure. Microstructure is here. Too high, too low. Break high. Micro volume is right there, and we broke away from it. So this now is support. I'm just pulling this out so you could see it. The top of the consolidation is there. It is support. Now the volume is here. Break high. Where's support? It's right here. Sellers are absorbed. Sellers are absorbed. Sellers are absorbed. So the buyers are here. Buyers are here. Sellers are absorbed. Sellers are absorbed. The buyers are underneath. The buyers are here. The sellers are getting absorbed. Right here, going to the moon. right? Except location, location, location. Watch. Now, I come up here, and I don't know. If you think I know, anybody who tells you they know is full of, what's the term? Baloney. Now, let's look at the structure. What do you see here? This is the chart volume profile. All a volume profile is, you understand, is a horizontal representation of price and volume at the price. When the price is up at the high here, you'll notice there's very little volume right there. What that is saying, think about this. If the price is too high at the moment in the store, somebody's got to have that can of tuna for their salad. But not too many buyers are going to pay that high price if it's perceived to be too high. If at the time the buyers down here think this is a reasonable price, a good price, they will buy it. So in the micro structure, I'm not paying that. Yeah, but it's on sale. And then if this volume is too high, they get in the car and they leave the store. What does that look like? Let's look. Again, microstructure, these are triggers. You can learn this in Trader Lab if you are inclined. I'm not saying it's your solution. I'm saying this is what other traders are doing. And you could always ask them, how's it going? What's going on in Trader Lab? So I'm really boxing this little thing in, and there's the high volume. When you break away, and isn't this similar to the other structure I showed you? Just asking. And I test it. What is that? Well, location, 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 real estate, real estate, real estate, level, 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 under the RTH open, and possibly a stop, or where am I trying to go? Back here. Mean reversion, this is called. Let's see what it does. Where's it come? What's too high? Where do we come? So, Trader Lab structured trade, you have choices. I mean, you can scale here, get risk neutral, or you're going for this. It's called mean reversion. It's a specific trade plan inside a plan. Is the trend up or down? Great question. For me, no longs. Doesn't mean you can't get long. We have traders that get long. We have other traders that get short, and we have some that are whirling dervishes who get long, short, and twist. It's up to them if they have an edge. What happened here? Now, watch. So we know potentially that is a short. Suppose you're going, I don't know. Of course, we don't know. But let's assume we know we don't know. What happened here? Look down a little bit where this little line is. What is this? There's microstructure. There's the volume. I'm not paying that. The shoppers leave the store. We now auction here. Buyers are here. There they are over there. Oh, I like it. But the sellers left the store up here, resistance, and now we chop here. I don't get over this, and I have my auction now here, and I break away. That's a potential short. Now let's just watch. Where do I come back? Right there. That's a potential short. This is all Trader Lab structured trading. Not saying it's good, not saying it's bad. I'm saying is it's language. You can learn to speak market if you're inclined. So resistance, chop, 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 same thing. Sellers are here, buyers are there, buyers are there. Break. These buyers are under the bus. Sellers are still in control. That's another short in the Trader Lab. All these are short entries. It's up to your plan and your risk management and where you're going. Mean reversion, that's your target. Who knows, right? Take a stop, get paid, clueless. Watch. Scale. Now, watch. There's more. You're going, really? Yeah. Remember we had this as a target from over here? Same trade, just from a different location. Over an 80% probability, past performance not indicative of future results. Short, to there, to there. Or if the trend is down, if you think, and we're under yesterday's low and this is too high, remember all the reasoning, this is called context, you could just go from here to there. It's your plan, not mine. Watch. Overnight low, over 90% probability we get here. If you're in Trader Lab, You are managing your trade. You're getting taken out on the counter rotations. You're hitting the register if that's your plan. Or your stops are way outside and you're trading a higher time frame. There are traders in Trader Lab. I always think of one specifically who will get short, put his stop up here. He'll be scaling, getting risk neutral, and then he'll go get in his Barca lounger because he trades statistics. 58.70. Let me just find that. Forget where these things are. Oh, this one. Yeah, 58.70. So this was our target up here, right? And this became resistance. That's this one. 58.70-ish is the next target coming down. But it's also breaking out of this large consolidation. The next target is here. Again, 30, not a recommendation. So if you understood the auction, you'd understand why. Not will it? You'll understand why. Do you know why? I would say if you're trading with indicators, you've never gotten an education on how the market works. You spent your life trying to get indicators to work. And I understand that. I've been there, done that, and I did it with systems. So I built trading systems. I figured if I had a system, it would do it better. No, it didn't do it better. It just did it on steroids. And it's the great way to curve fit. Not necessarily. So this is the next target here, okay? So if you're trading these trades, at least for me, and I'm not saying this is the right way or even the best way to trade, I have no opinion. This is my target, so I just am going here. Let's see what it does. VPOC migration. You notice something familiar. Oh, and where am I going next? Next target. These are all structured trades in Trader Lab. Now, let me ask you a question. You're not going to get all of it. You're going to take stops. Are you okay with this if you were trading in the Trader Lab and following this process? There's no holy grail. There's no secret sauce. None of that. Don't we all wish? And we all are looking for this magic bullet. Have you ever thought maybe there is none? And that all these internet marketers are just basically, mostly, not everybody, mostly selling snake oil? That's been around since they invented snakes. Because even when I started in the business in 1980, there was always, come to this seminar. Unfortunately, and I did a couple of those early on because I would have paid anything to be able to do this. And back then, when money was still worth something, I remember flying to Atlanta, putting myself up in a hotel, and I'm in Chicago, don't forget, and doing a 2-day seminar to learn nothing useful. And of course, bought every book on the planet. That's all we had was books, seminars, nothing else. There was no internet. There was no computers. Try that. Classical bar charting. And when I started and I learned it from the CME, which is where I learned classical bar charting, we got a chart book every week. And you would actually put open, high, low, close by hand in the book daily for all the markets you were trading. That's how I started. And then when technical analysis became available in its infancy, I gravitated to that. And for you guys who don't know, I shared an office with George Lane. He created stochastics, oscillators. Now I thought, here's the holy grail. It crosses over. Look at that. Anyway, that's how I started. So if you think you've been there, done that, I'm going to say you just haven't had enough time to make the statement that you've been there and done it. Because I have done everything you've done and probably gone down more dead ends than you've had time to go down. And I always wondered why everything that looked good and behaved at times and paid me at times would fail. So that's why I built systems to try to then automate the curve fit so I could stay up with it. Because I believed that if I could fix it, it would work. And then I had a schedule of optimization. Let's use an exchangeable term, optimization curve fitting. So along the way, I had to start throwing away the things that didn't work. And it came down to indicators. And it was very hard for me to do that because all these indicators, anything you do, even if you have nothing on your chart, you don't even use a chart, you just push buy or sell, you're going to have winning trades. That kind of hard to say. Are you guys kind of hard to say? Are you guys able to hear me? Let's see. Are we cooking or not? Am I still here? You see the stream. How are we doing in YouTube? Are we still there? Or have we gone? It is? Okay, great. Because somebody posts in the chat in YouTube. I don't see the chat. I might have to just throw something in there and let me know if you have. Thank you. Sorry, guys. This is Costa Rica. You know, I think the sun came out, which is out, and it's in the high 80s here at the moment, and it probably wasn't in the mood. Did somebody post in YouTube yet? I do not have the chat at the moment. Okay, I'm going to recycle YouTube on my end to try to see the chat. Hopefully I don't lose it. Okay, guys, how we doing? We're still cooking? Theoretically, now all good, all good. Yes, yes, thanks. Thank you, thank you. Okay, guys, sorry about that. You know, there's nothing like being in the middle of something or try trading when all of a sudden your internet goes down. It's very rough on the stomach. Okay, so we come back up. I'm not sure. Yeah, I can't tell if we're coming or going here. So this is the VWAP. We pull back. It's now only 9:30. Now we have a statistic in the Trader Lab called VWAP to VPOC. I hope I'm still cooking here. Are you guys hearing me? Yes. Okay. Thank you. How are we doing in YouTube? Are we still there? Kind of weird. So this is resting liquidity. This is VPOC migration. This is, remember, structure in the Trader Lab. Two possibilities. Come up here. This is micro resistance. This is location. This is high volume. Does it look familiar? Right here I have a sweep. This is suggesting the possibility of counter rotation. This is an area to observe. Let's see what it does. I don't remember, of course, so I don't know. This is your resistance. Right here is a potential short here. If you took it, and I think we had a conversation in Trader Lab, I don't remember now. I think so, with one of our traders who got short here. And we were talking about, is this a valid trigger? Well, for me, there's two areas that we have to be conscious of, this and this. Variable high volume node. So if you took a short here, your entry, let me show you the entry. Now, this is micro again, and it doesn't, remember, we all take stops. We all, utter certain phrases, and we're human. So we can't get away from our humanity or how we, quote, emotionally feel about anything that happens in this business. You got mid, VPOC. Here, I get a sweep. This sets up a short right here. So I'm looking for my trigger. So I have sellers there. There's the icebergs. I come down. My sellers are below my buyers. I hit my VWAP. And some traders in the Trader Lab are saying now the context has changed to longs. I'm saying, well, that's pretty interesting because, yeah, it could be if it's subject to your time frame or fractal. It wasn't for me, but I don't know. Every time a trader posts something, I'm going, well, it could be. Because how can you say it is or isn't? Some traders are going to be taking longs. Other traders are going to be stalking shorts. Me, shorts, but hey, doesn't mean anything. I take stops, don't you? Okay, welcome to trading. So right here, I'm looking at a short. I get my trigger. I'm below these buyers. Now, right here, it gets weird. So this is resistance right here. If you take a short, remember, let's go back to where our resistance is. It's here. Variable high volume node. We are below it. So that's resistance. This is your trigger. Right here, you would take a short. Your stop needs to be there. If you took your short here, you might get scaled, or you take the short here. This is a structured trade. You would get risk neutral. Finto, I think you took this trade in the Trader Lab. You are correct about that being a viable trade. And Finto got a scale, and anyone else who took this trade following Trader Lab process would scratch the trade if they didn't do anything else just and get the trade, because it's a 2-lot minimum configuration. The idea is you buy your ticket to ride. So the first job in the Trader Lab for a trader is to, number one, know where their trades are in advance. You're not making it up. This is not a video game. Number two, you have to know the range potential to get risk neutral to buy the stop on your runner. Minimum 2-lot configuration. What does that mean? You either take a full stop or you get a scale and you scratch. The other part of that process is if you get scaled, it helps you manage your emotional state, which is as you know, varies between euphoria and depression and can change within 5 seconds in this business. So when you have control, or you know that your fear can be better managed, because the worst that happens is you get a scratch, that might be a better alternative. Does that make sense? Does that give you better control over your emotional self? And as I call it, Mr. Hyde, Jekyll and Hyde. So anyway, this trade would get taken out, you would scratch. Good job, Finto. Now, we come up through the liquidity. Now, this is a good short, and it didn't, you'd scratch it, assuming you had a trade plan for it. Now let's look at the next location. Come up right here, outside edge, and we're still looking for it to return. It's called mean reversion. Now this is a hard location. You might not have a trade here. And if you don't, it's not a big deal. Here's the volume point of control, too high. Now, everybody wants to catch every rotation. That's really a manifestation of FOMO. So it's very easy to overtrade and just try to trade the middle of nowhere. Now, some traders might have gotten short here. Me, I have no trade over here because I don't have a trade here. I have a what's going on. And what happens here is I see the trade, but how can I enter? Where do I enter it? So for me, I don't have a trade. If I had time and structure, I would take a short here. No short, no trade, no way. Hasta la vista. Thanks for playing. We'll get you at the next bus. So I have to wait for my next structured trade. Let's see where it is. What do I know? This might be too high now. I'm below it. Let's just see what happens. So here, and I had a little hole in the data. That's when by the way, that's when the stream went down right at the start. Always a good time, don't you think? There's high volume here. Data hole there. Must have been the monkeys. Come down to what's called the IB low. There's over 90% probability we take this out. So in the Trader Lab, you'd be trading statistically towards this. And if you have a trade, that's fabulous. If you don't, you're just sitting here working on your crochet. Now, we come back inside, and now there's possibilities. You do remember I have statistics that suggest I might go lower. One moment here. Let me make sure I can get everything working here. Not everything is working. Whoa. Hope we're still cooking with gas over here. How we doing? Are we live, or is this Memorex? Please give a thumb up in YouTube, a like. It helps the stream. Remember, you can visit the Bookmap Discord Trader Lab community. There's no cost. There's 60 PDFs you can download of these structured trades. They are broad strokes. In the Trader Lab, there's a lot more detail, ongoing narration, interaction by traders, whether they're new traders or senior traders over 50 years. I'm continually narrating. and educating in the Trader Lab. There's no cost for that. Okay. So this here is microstructure. We come up to the retail price. Let's watch. This is called the IBF. This is a structured trade. It is not qualified for me in this context. Context is the condition of the market or the trend, and it changes from directional to rotational. We have separate plans in the Trader Lab for the changing conditions. So the trend might be down, but how do you trade a downtrend when you have counter rotations? There's a plan for that. You can learn that, and of course you have to vet it and make it your own. It's not what I do. I'm sure there's traders in Trader Lab do a better job than me. It's not about what I do. It's about what you learn, and then you find your groove, your psychological alignment. Let's look at the trigger. Let's just look at it. It's all structured trading. That's what this is. Now, I don't know. What I know is this is at the time, this is the highest volume for the day so far. So it's retail. If I find the price, and let's look at the price that might be too low. Let's look at it from the other angle. We got to look at it always from both sides. So let's come down here. This is how what I share, I should say, in Trader Lab. And you might say, I'm an educator. What am I doing? I'm helping traders understand market mechanics. How does it work? Once you can read the language, this is a foreign language. And indicators, I always come back to this, are attempts to translate. It's no different than Google Translate. So we let our indicators do the work, but we never develop an understanding of how the market works. We are looking to have an indicator solve the problem, and the problem is randomness. Well, okay, and that does work at times, of course. If you had nothing, it works at times. So that's the other thing. What do we see here? Stop sweep, now bookmap, right? Order flow. Liquidity here, absorption. So we have absorption, that's what that is, resting liquidity, buying icebergs, sell stops, absorption, sell stops. What's this? This is something, the only thing I use from my experience with indicators, stop divergence. What happens if the market goes lower and there's less, divergence? Well, I only got 4 sell stops. Well, if I don't get new sellers and it's exhausted, which means it's just the sell stops coming out, then what? Then this, maybe. So here's my microstructure. Now, I don't know anything here. Let's be real. Nobody picks the high or the low. And by the way, if you do, come to Trader Lab, clue us in. I'd certainly be interested. And I break high. Now, I don't know. I know this. I have buyers here, and these sellers are below the buyers. Sellers are in control. Icebergs are buying. Right over here, seller, buyer. Sellers are in control. Now, I'm seeing stop sweeps. That puts me on alert that there might be a counter rotation. I'm just letting you know. This is how I use this. This is sweeps. So I got sweeps, absorption, iceberg stops, stop divergence. Look how I'm putting the pieces together. And here's a seller over here. Lonely seller. Why didn't the market go down? You see a red bubble. Doesn't that mean it's going to go down? No, it doesn't. It means there's a passive buyer here. This is order flow. Now, I don't know that there's absorption here until the buyers are above here. Now I have my micro high volume there. Remember, shopping, too high. I'm not, sellers are there. Buyers are absorbing here. Who's going to win? I don't know. Could keep going, right? Buyer, okay. Sweep, resistance. I break above it. Trade could be over right here or wherever. What's your plan? If you can't answer the question, what's your plan? You need to get one. Unless you like making it up as you go. Which, if you have an edge with that and it's profitable, then you don't change anything. You keep doing it. Because it's, as they say, if it's not broke, you don't fix it. So this is a trade management opportunity. Now, let me ask you the question. Suppose it only did this and then it dropped another 40 points. What would you do? I know this. How would you feel? But that's not what I'm asking you. I'm asking you, what would you do? I'll tell you what I would do. I'd go, Huh, that's interesting. And I'd go on to my next trade. I'm not in the business of getting the high and the low. I'm in the business of catching chunks that fit a vetted, structured plan. That's the business I'm in. I take stops, and if I'm trading larger rotations with the same risk as shorter rotations, my objective is to get risk neutral. I want to buy my stop on how many other contracts I trade. And it's all formulaic. Then the trade works, trade doesn't work, and if it doesn't work, did I do what I'm supposed to do? Did I follow my plan? Did I not make it up? Did I not impulse in? Did I follow my plan? When the casinos pay the gamblers, did the dealer make up a new game because they were bored? Did the dealer change the next hand because they paid a gambler $100,000 who walked out with a nice new suitcase of cash? Or do they just deal the next hand? Why would they just deal the next hand? Because that's the only way they get their edge. And they acknowledge and accept the only way to extract dollars from the gamblers is to pay the gamblers. What business doesn't have overhead and cost of production? If you're not thinking of this business this way, then you don't understand the business you're in. That's why Trader Lab exists, to help you understand the business and then to help you build out a business plan and trade plan to interact with the other participants. And assuming you take the time, and this is where the work is, not playing a video game, but to know where your trade shows up, where you have an edge. Are you enthusiastic to wait for that trade so you can extract your edge, assuming you did the work and you actually have one, or you're just going to click the mouse for the adrenaline and dopamine fix? By the way, that's okay, but I always suggest go to casino, get the cocktails and a ticket to the buffet. This is business. Let's look. So, this is a reversal. Where's our resistance? Where'd this come from? Well, this was too high. Break. Where's my test of that volume? I'm not paying that. I'm leaving the store. Yeah, but I like the shop here. Really? Short. What do you think? Trader Lab. Can you do this? If you come to Trader Lab, maybe. No guarantees. Data hole. Nasty. Where do I come back? By the way, let's see this concept. Resistance. Support. You're in Trader Lab, it would be short cover. Does it matter? I'm asking you the question. Does it matter? If you say, well, maybe there's more, I'm going to go, you're absolutely right. But what do I know? There's some things I know, and there's mostly I don't know. What I know is this level is too high. The shoppers, think about how simple this is, left the store. But you like to shop here, so you come back. Is this price still too high? Well, yeah. You leave the store right there. And where was it too low? Where did we cover? Wasn't it there? Just asking. Are you guys tracking? This is Trader Lab. Not saying this is anything you should do. I'm saying that you might find yourself an opportunity that I think is pretty rare. And that is to be in a community of traders who are serious about building the business. You can learn from everybody. I find, for me at least, the issue was trying to fix a defective process, believing I was doing the right thing because I was getting random success with it. That was the catch-22 for me. And you guys too. I mean, think about if you didn't have anything. You didn't even have a chart and you had a button and it was a random button. So it was only one button. You couldn't do buy, you couldn't do sell. It was a random generator of buy or sell. And you didn't know what it was going to do, but you get to push the button. That's your job. And it would have winning trades and losing trades. Does that tell you something? What I figured out was it didn't matter what I did because I'd always have winning trades and I'd always have losing trades. Okay, but why would I have to continually go back and tune and tweak and curve fit? Why was I doing that? And it being a slow learner and having everybody do the same thing that most retail traders did, including me, even when I was a fund manager, I was building systems because I was managing dollars across asset classes. And I thought the solution was to put this thing on a schedule, get a huge bunch of data. Now, this is back in the mid-1980s, so, we didn't have the kind of, I had to buy data. It was very expensive to get it on a disk. Remember a floppy disk? You could put it in your bird cage and you'd buy the data. And then I'd get a month or so of back data and do walk forward testing, get the data, run the optimization, and then walk forward testing, and then, it's wonderful, and then go into real time for 2 weeks and keep repeating this process, and was constantly breaking down. So it was never satisfactory, because basically you're trying to put the market in a box, and somehow that tomorrow's going to be yesterday. Well, we had short covering on Wednesday. The market hit a target. Why is it going down today? Is today yesterday or Wednesday? No, today's unique. We have inputs, we have reports, we have participant behavior. We had short covering on Wednesday. Why do you think it would go up today? And by the way, it could go up today. So why is it going up now? Right? Because there's shorts in the market, and what happens? Market goes up to go down. The market goes down to go up. Why does the market go up? Well, if we have shorts in this leg, and that's our target, by the way. If you took a short, you might be done here. You wouldn't necessarily be taken along, unless it's in your plan. I find, and this is not a recommendation for me, I just kind of like to get aligned on one side. Maybe I'm just lazy. But if I think we're going down, I'm going to use counter rotations, not to trade the long, but to cover the shorts and get short again, and then cover the shorts. If the market comes all the way up wherever it goes, I already have another structured trade coming up, and it's not a recommendation. It's out here. It can be out here, but not look left. Let's think. Write this down. Think like a retail trader. Don't act like one. What do? They are mechanical. What do you want to do? I don't know. Do you want to do what they do, considering the failure rate? Or do you want to maybe think like they do, take your experience, but not do what they do? Let's think like a retail trader. Let's not act like one. Where's the swing high? If we know where the swings are, then we know where the stops are. If we know where the stops are, is it possible we're going to come back into those stops? And then if we get exhaustion and there's no precision, that we may want to fade for a continuation trade down. And we always risk every moment that we put a trade on taking a stop. Let's go take a look at the concept. So let's start thinking. This is an outside edge, too low. This is what's called a distribution. It is a consolidation. If you come to the outside, and there's going to be stops at these outside edges, like here, then anywhere up in these areas, we can get a counter rotation. So that's the first piece. The next piece is we have our VWAP. What is the VWAP? You know what a VWAP is. So what else is going to be at the VWAP? And what's going to be at the mid? So here's what we have. In the Trader Lab, there's structured trades. One of them is called the VWAP to VPOC. The VPOC is here. So the range is going to be potentially out here somewhere, back to there, and then back to there. So this is a potential trade. And I don't call trades. I take stops. Very proud of it. Why do I take stops? Because if I don't, I may put myself out of business. This is not a business of right or wrong. It's a business of maybe. So we have this location. We have this location. We have this for a scale. And we have this as a potential target. And it's not a recommendation. So now let's just follow the yellow brick road. And I'm not calling trades. I'm observing behavior now. Let's watch it. And if you have questions, please post them. Please give a thumb up in YouTube. Helps the stream. Shows me that you're getting some benefit, encourages me to keep doing this. And remember, there's no cost. There is a link in the bottom of YouTube if you want to visit Trader Lab. I've coached a lot of traders over the years. We're all the same. We're the same because we make assumptions and we're guided by our primal behavior to avoid risk. We'll spend our lives trying to create certainty. And that's curve fitting and indicators and time frame, all the good stuff that we've all done. But we're driven by a belief we can get something that in this environment might not exist. Is that you? I'm only asking you because that was me. And unfortunately, more years than I care to think about, because nobody talked to me about it and nobody really knew about it, because indicators and this form of technical analysis was in its infancy. So I had no reference point. All my buddies were floor traders. I decided I was going to become an off-floor trader. I'm more analytical than jump up and down, stab each other with pencils down in the pit. So notice the behavior. Notice the location. We're just looking at behavior together. Remember, I don't call trades. What is this? You're asking me. What do you think it is? Question? Are you guys with me? Remember, I don't call trades. So the idea of this is we have potential resistance here. We have this location and an outside edge. I got the VWAP and the mid. I can certainly continue to squeeze. So let's see if we can read the minutia. I got my buyers here. My sellers are here. My sellers are here. My sellers are here. The buyers are here. I'm reading the order flow. I am at resistance. You can see it there. And I have a level here. So the helmet is on and anything can happen. Not a trade recommendation. The possibilities are the following. Down to the target below, squeeze up, stop out. The danger is the VWAP. The mid is the danger. There's going to be stops here. This might only be a shallow counter rotation. I don't know. It's not my job. I can't predict. So if I take a short, I'm prepared to take a stop. But my stop is going to be really just this. That I can handle. It's a couple points. No reason to bet the ranch, as they say. And if you move your stop away and you say, well, I don't want to take a stop, you don't understand trader. It's not about how you feel. It's about, do you have an edge and what's the behavior that creates a trigger, and does it justify the risk for the potential target, which is this. And if this trade was to fail, you already know where your next area is. That's as complicated as this is. I do know this is a higher risk area because there's going to be stops here and here. Let's just watch the behavior. If you have questions, post them in the meantime. Please give a thumb up or a like. As they say, smash the button there. It's helpful and lets me know you're getting some value. Also, there's a link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. Watch the heat map they're pulling. That's like taking the lid off the pot. Now we have absorption happening up here. You'd anticipate that at the VWAP. And don't forget the stops are here. The VWAP and mid are areas to engage, as well as this. The risk in this trade is these locations because of retail trader behavior. So now we just want to observe. We're coming out here, low volume outside edge. There's still confluence in here. So we're just going to watch it. Remember where the support is. Support is here. Resistance was there. You get through here, then we have these levels to watch. Mid VWAP. Let's watch. Microstructure is here. This is the green line. We're just going to watch it. Right here. We're just looking. Not a trade recommendation. You don't want to take my stops. I take them. And sure, emotionally, I'm disappointed when I take a stop. We all are. But I also know that I'm in the business of staying in the business, not of being right. So the only way I can stay in the business is to pay the gamblers when they're right and I'm not, and the cards don't favor me. You see what I'm saying? So if this is my short, here's my support. If I can get under here, then I've got this and that. But let's see. Follow the structure. Just read it with me. This is the Trader Lab. Now, what the idea of this is to read it. There's no indicator. What I'm using is order flow and auction principles. The fact that we had a seller here and we're at a location, right? And that's the VWAP. And I'm out here. I'm still in my outside edge, you see? So when I was looking over here, this is the same trade, really. Support. Now out here, resistance, support. So if I get short here, I have to be thinking about that. If I can get under that, then I got that. If I can't get under this, then I'm going to get squeezed. That's it. And I'm not saying anybody should take these trades. This is very nuanced. So let's just watch. We've got about 9 minutes. And by the way, if you have questions, please post them. And remember, this stream's available to everyone in the Bookmap Discord Trader Lab community. If you're not part of that, if you're in YouTube, there's a link down there. I want to show you, if I can, what's in the Trader Lab community. See if I can do this. No. There's a library of webinars, and thanks to our curator, Ned. Thank you, Ned. And you could see best of videos going back to 2022, and there's all kinds of stuff here. Meet the Trader Lab. Are you a trader or a gambler? Why most traders using indicators fail. I think you might find that interesting. Contextual narration, day trading career plan, I don't know. The actual trades, all kinds of stuff. Priority of inputs, how you might operate in this environment, and there's just tons more. So you're all welcome to that. There is no cost in the community, which I think is the real plum, if you will. It's the traders in this community. Our senior trader has over 50 years experience. I've got 45. And you can see what's going on here. All kinds of stuff, I hope. But this goes on. I'm in here at 6 in the morning or so, and this is ongoing. Trades, discussions, context change, Here's a question from Finto. Looks like a trigger. What am I missing? Actually, you weren't missing anything. So there's all this kind of discussion going on. If the behavior is too frenetic for you, then it's not your job to trade. This is where you have to learn to manage FOMO. Don't you love FOMO? Advanced trading, and I'm giving you the levels, not trades, but to ask you why. I'm going to ask you why. I'm not going to say, do this. I'm going to say, what does it mean? How do you learn this? Screenshot, annotate, then go back to the day and replay it at slow speed. Mark the times and see the behavior. You need to be able to train yourself to speed read the language. That's why indicators don't have much value. There's no time for backwards looking indicators. You need to be in the present, in the moment, to be as competitive as possible. Yeah, if you're visiting in YouTube, does this resonate with you? Look, I know we all want indicators to do the work. Trust me, I want it to. Didn't work for me. And I would say, considering the failure rate of most retail traders, they probably have a similar experience as me, and that is they don't work. But because everything is successful randomly, they still get winning trades. Remember, gamblers take dollars from the casinos, but overall, the casinos are taking more dollars from the gamblers. This is our business. If you want to learn it, and there's no guarantee for anybody, you got to roll your sleeves up and do the work. There's a lot of support in the Bookmap Discord Trader Lab community. And the interaction of these traders, these are serious traders. So this isn't romper room. This is all about the business. So if you're looking for easy, it doesn't exist in this business, or else everybody would just buy a software package and have an ATM in the basement. We're all past that, aren't we? So let's stay. If you're not past that, then you have more time to put in chasing the right mix, which unfortunately I never found it. And I spent more years than I care to think about, considering I started trading in 1980, looking for that. So I found, for me, it was not an indicator. It was understanding the behavior of the participants. And all your indicator is really a methodology to attempt to translate what's happening right here. With order flow, I know what's happening right here. I don't know what will happen after that, but I do know right here, I can still anticipate a rotation down to here, and that's still what this trade is. So, and the key to the trade is to put it on and attempt to get risk neutral. Notice where these trades show up. Support is here. Support is here. You see? So you would know the levels, and then you have to wait. What do we know? VWAP and mid. And where's the stop? VWAP and mid. So either you have a trade here or you don't. There's really not much else to this. And then you just wait for your trade. Not mine, yours. I hope that makes sense. Please give a like. Please give a thumb up in YouTube. Please feel free to use the link in the bottom of YouTube if you want to visit the Bookmap Discord Trader Lab community. There's no cost. The other thing is there's a lot of additional education in the Bookmap server. Large cap, small cap stocks, options, crypto, order flow with a high tier tool like Bookmap, market maker behavior, algorithmic behavior, and a lot more. Why is order flow material to you? Does it give you an edge, or are we waiting for some indicator to roll over? I don't know. I don't use them, so I can't answer the question anymore. But I will tell you that when I got more down to the granular level and realized that there's a language here, like think about learning a foreign language. What does it take to learn a foreign language? Or are you going to use Google Translate? If we can relate to this like a language or playing a musical instrument, then you know what that takes if you've ever tried to do that. You start out incompetent. We all start out incompetent. Doesn't matter what we do in any skilled, profession. Then you develop slowly with practice conscious competence, but you're still somewhat incompetent because you have to process it mentally. Then you get to the point, like with the foreign language, where you're not taking that step in your head, it's just flowing. That is getting into a flow state. Then you can start to react and respond quickly. That's when instead of speaking slowly or asking someone who's speaking a foreign language to slow down, that now it's automatically being translated. That's learning. That's what trading is. That's how you learn to trade, in my opinion. And that's kind of the way we build out this process in the Trader Lab. If that resonates with you, and if you realize that using Google Translate may not be the solution, and if it is, by the way, come to Trader Lab, show us how to do it, because we'd all like to trade better. Nobody has a monopoly on, quote, the right way to trade. But I think most of us have figured out what doesn't work, or we're still in the process of figuring out what doesn't work and trying to fix it, which is what most of us do because we have that intermittent winning trades along the way. We just keep losing overall. That is the catch-22 of being a retail trader. If that's you and you want to get off that bandwagon, you're invited to the Bookmap Discord Trader Lab. Just use the link in the bottom of YouTube, and I'd look forward to meeting you guys there. Appreciate you visiting the Trader Lab. Remember, there's 60 PDFs you can download of these structured trades, plus a library of webinars. These are the trades I've been discussing here. I'm not a vendor. There's no specific course. It's the community that leverages their experience, shares structure, shares trade plans, debates context and changes. All of this is what makes this a vibrant community of serious traders looking to build out the business. If you're interested in that, come visit the Trader Lab. Please give that thumb up in YouTube, and remember these streams are available exclusively to Bookmap Discord Trader Lab participants to reverse engineer, review. Have a great time, everybody. Trade safe. Have a vetted, structured trade plan. Manage your emotional states. Visit the Trader Lab if you think this might have some value and help you on your journey. Don't forget to give the thumb up in YouTube. Look forward to seeing you soon. Trader Lab, you guys are great. Thanks for your participation. And remember, as new traders come into the Trader Lab, and there's quite a few of them, always be there to help them like other traders who preceded you helped you. Take care, guys, and don't forget the thumb up in YouTube.